I don't think any change would really happen until March. If you look historically, markets don't really react as strongly as you'd expect to a government shutdown. What markets react to is things like a default on debt payments. If that were to happen, I think you'd see the market start to get really volatile, especially the fixed income markets. But right now, I think most people are saying this is really more a political issue and not a markets issue.
Yep. Andres, do you see it the same way?
Yeah, if you look at the last shutdown in 2013, it was 21 days long. The market still ended up 30% up. And even for that year, compared to this year, the economy was not in a healthy state as it is today. So I see it as a non-event from a market perspective as well.
Yeah, I mean, it's largely because the trend's intact, right? I mean, the broader trend of higher markets, you know, we're just entering earnings season, which earnings are expected to be strong. Nothing's changed.
Yeah, it all comes down to earnings expectations, and not only earning expectations, but has the fog cleared when it comes to the bear in the street versus the bull in the street, and that has narrowed as well, which I think is why volatility is so low, right? The fog is gone, people can see fairly clearly in the horizon, and that's good for markets.
Albeit volatility and volumes did pick up a bit last week. Is that shutdown related?
It could be, but I mean, let's put it into perspective, right? So all of last year, the biggest drawdown was down 3%. Historically, if you look at the last 38 years, the average biggest drawdown for the year is 14%. Right? So I think when we look at down 20 basis points, now your heart starts to beat a little bit faster.
Sure.
That's not normal, right? Now, having said that, just because we saw low volatility, it does not mean we should expect more volatility, right? Volatility is just a reflection of what we see in the markets and what we see in the global economy, and the global economy is doing fairly well.
Jet, in terms of the broader level of markets at the moment, you think this sort of melt-up that we've started the year with could extend quite significantly further?
I think it absolutely could, but I think people have to look at which sectors are most likely to melt up. The one that we like the most is technology. So if you compare technology growth in terms of sales versus the broader market, it's growing about 50% faster. And what you start to see is across the technology sector is it's impacting all sectors. We're actually breaking off a piece of technology, moving it to communications. You see things like robotics and artificial intelligence is completely changing the industrial sector. So I think technology is really going to start to take over and propel growth going forward in a variety of sectors.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.